So a credit union is a financial institution like a bank, but that the big difference is instead of being owned by shareholders, it is owned by its members, by the people who deposit money there. And this ownership means that not only does it operate not for profit for its members, and so there's no incentive to nickel and dime people, but also it's a democratic organization. Its board of directors is elected on one member, one vote principle, no matter how much or how little money you have in the institution. It's all volunteer. The directors are not paid, and if you don't like the policies, you are empowered as a member to vote them out. So it's a very different model of financial institutions than the banks like this one across the street that kind of dominate our thinking about what is possible. And sort of a very brief history, the first credit union in North America was founded actually just north of here in Quebec in 1900. And it was French-Canadian immigrants who brought the idea to the United States, to New England first, actually New Hampshire. In 1909 was the very first credit union to be founded in the United States. And they started off very small. They started off with being institutions that were a few hundred people who generally knew each other, were members of the same workplace, members of the same church, members of the same fraternal club, and what they did, why they were really considered important, was that credit was, for people of modest means, credit was very hard to get. We didn't have credit cards, and banks saw people of modest means as not profitable. Sort of like how Bank of America initiated that $5 fee to get rid of unprofitable customers. And so the only place that people of limited means could turn for credit was loan sharks and pawn shops, which would often charge rates of interest in the thousands of percent. Leading to people just being destitute and on the verge of slavery. And so the spread of credit unions, which basically made loans at cost to their members, was a way of both creating a more democratic financial system and democratic economy, but it was also a way of making credit available to people of modest means. Now, as time went on and banks started to offer loans to lower-income people, credit unions have slowly grown, and at this point are now provide about 10% of the financial services in the United States. But they're still on the same cooperative principle, in the same way that City Market is a cooperative, a credit union is a cooperative, and they've grown. They offer now pretty much all the same financial services as a for-profit bank, but they're democratic and controlled by their members. And I think that offers, from my perspective, and why I think that it's a powerful thing that we're standing out here, is it offers an alternative to what to what happened in the financial crisis. With a bank that's owned by shareholders, you put your money in, and the liability of the person who owns the bank is limited to losing their investment. But at the same time, they're gambling with both their investment and with your savings. And your savings, if they lose, it's all backstopped by the federal government, so they take big risks. And they created, many of the problems that led to the financial crisis. With a credit union, the owners are the depositors. They're only gambling with their own money, so they didn't take these big risks. And they failed at a much, much lower rate than did the large banks because of that. So when we saw the bailouts happen, the large banks that had behaved irresponsibly essentially got their asses saved by the government, and the credit unions, which were owned by the people, had behaved well and could have, basically been rewarded for their good behavior. Got their basically had that whole advantage taken away from them through the bailouts. So that's kind of one of the things that for me is really why this is an important part of the Occupy Wall Street movement, is that it's not just saying Wall Street is bad, but here's an alternative. Here's a model that people have been working hard on, as volunteers, as activists, as business people for 100 years, slowly building it up. And it is my belief that we are now looking at a time that credit unions can go from being this sort of thing that's on the side, that's much smaller to banks, to being something that we can actually bring them to go toe-to-toe with the banks and have them be our advocates and have them be our banking system. So, those are my thoughts. My stump speech.
Thank you.